Welcome to Stockwatch with me, Ntobeko. And joining me to unpack your stock-related questions today are Ntobeko Stambu from All Weather Capital and Ricus Reeders from PSG Hole-in-One Ruimsig. Be sure to send your questions through via email to stockwatch@bdtv.co.za, via SMS on 41392 or on X at Business Day TV using the hashtag Stockwatch. Gents, thank you so much for your time this evening. Ntobeko, I'll start off with you. So markets digesting Nvidia's numbers out after market close yesterday. The earnings look good, but market response quite lackluster. Why the disconnect?
I suppose what we've seen is for the last while now is a bit of rotation theme, out of the AI-related stocks into more cheaper segments of the market, and I think we've seen just basically a continuation of that rotation, despite the outcomes that you've seen. I think we continue then to see a movement into other markets that are relatively cheaper.
Yeah.
So I think that's just the continuation of the theme that we've seen over the past while.
Ricus, does this speak to a rotation out of those AI-related stocks, or does this speak to concerns about Nvidia's valuation, bringing back that whole bubble conversation back to the table? I was watching an interview and an analyst said that markets don't know what to do with this level of growth.
Yeah, as Ntobeko said, there is concern about the huge capital outlay that some of these hyperscalers are doing, the effect it's got on software companies and, by definition, the whole sector. So there's a lot of uncertainty, and markets don't like uncertainty, as these questions, whether valid or not, arise. Well, I think it's valid questions, except we don't know the answers yet.
Yeah.
How it's going to influence future income streams if you're a hyperscaler. How much of your software service is going to be replaced, or maybe it will be enhanced by AI. So these are all questions, and I think it's not necessarily a selling out of that sector, but a shift in focus, as Ntobeko has said, to other sectors in the market. If I'm not mistaken, something like McDonald's has now outperformed Nvidia since the start of the year. Gives you an idea of what is happening. So there's a lot of talk about bubble territory, but as I've said before, if this is a bubble, it's the most talked about, most feared bubble that I've ever seen, and that's not the way bubble markets work.
Yeah, and it's also just been interesting to see market reaction when it comes to news out of the tech sector. Earlier this week, we saw news of Meta and AMD, that chip deal being sealed. We saw AMD ticking higher. And today, I think Salesforce was out with numbers. That company in the green, despite that sort of rotation out of tech and software that we are seeing. I'm wondering whether that software sell-off was over-exaggerated, because sifting through those numbers, I realized that Salesforce is seeing or has reported clear AI integration into some of its core businesses in Ntobeko.
Look, I think the starting point is always market expectations. As much as, for example, you spoke about Nvidia. Sales numbers, growth being up 73% for the fourth quarter. Despite that, you get a negative market reaction, because it depends on the starting expectation. If the expectations were a lot more higher, even though the numbers come out positive, but they're actually below what the market wanted to see, you still have then a disappointing outcome, and hence then you see the negative reaction. So I think it's always important to just to qualify market reaction based on what the market actually was expecting to believe to begin with.
Okay.
And hence then the negative price action. Or sometimes even when your numbers come, look lower, but you see a positive reaction, it means then that there was a kind of understatement of those expectations. So it's all relative to the starting conditions.
All right, let's move over to, okay, wait, before we get into the questions, just a quick one on yesterday's budget, Ricus. Consensus was that it was a good budget, a positive budget. If that's the case, why did we not see SA Inc. stocks running?
I think part of it is what's happening with the American market. But if I take a look at specifically the action this morning as opposed to where we closed, because obviously our close was coinciding with a pretty weak American opening.
Yeah.
But this morning, your force's favorite, if I can use that term, the ShopRites were bought, the Bitvest were bought. So those are the type of company that foreign capital will have an interest in, because that's the kind of company that can actually invest in size. So
so a bit of a late reaction to that.
Yeah.
Okay.
Yeah. So I think, these day-to-day reactions, it's 50-50 really statistically. But if you take a look back a little bit over the past 2, 3, 4 months, I think there has been consistent interest in SA Inc. stocks. And what happens today in the past, trading day in 8, 9 hours doesn't really matter all that much. It's the longer trend you've got to take a look at. And that interest in SA Inc., I think, was given further impetus by what I thought was one of the more optimistic budgets that we've had in years.
Just your take around SA Inc. stocks and the kind of interest that we could possibly see, right? We have seen that rotation into emerging markets with miners doing the heavy lifting and benefiting the most. And there is consensus that we're probably going to start seeing that flowing through to SA Inc. stocks in Ntobeko.
I think if we look in the context of the budget and what it delivered, it speaks a lot more to, a lower interest rate environment, a lower cost of doing business. It speaks to relief to the consumer, with the bracket creep and, being inflationary. And so a lot more money in the pocket of the consumer. So the net beneficiaries of what we've seen has to be more consumer-related stocks, banks, benefit as well from the lower yields and cheaper source of funding, and also the bank books actually becoming more profitable because they hold some of these government bonds.
Yeah.
So the net experience should be positive, and also it speaks to things like NPLs, like with a lower interest rate environment and maybe a little bit of a tax break from that perspective. Should improve the position of let's call it a beleaguered consumer.
Okay.
And so on the margin, then you should see then bank stocks do better. You should see good operations like in terms of retailers that manage that their credit experience is better, do well in this environment. So there's certainly going to be a discrimination in terms of a good quality versus bad quality, or badly run stocks in SA Inc. But those that are run fairly well and that are geared towards SA, macro environment should actually do much better.
So a ShopRite likely to benefit more.
Yes. So we are still relatively positive to SA Inc. We're positive banks. We're positive a selection of insurance players out there. And the selection of retailers that might do better. Yeah.
All right, sticking to some of those consumer-related stocks, let's look at Spur's numbers. Ricus, the last time I asked you if you'd rather buy a Debonairs pizza or invest in famous brands, and you said no, you actually like Spur. Give me your analysis of those numbers, really dealing with a cocktail of negatives from the FMD outbreak to generally tough macroeconomic conditions and a cash-strapped consumer.
I think the results sort of speak for themselves. If 80% up in earnings, I think the revenue up about 8%, something like that, from their local operations. They're continuously expanding not only their offering in South Africa but also outside of South Africa. It was a very good set of results in a not very friendly consumer environment, where margins up. So I've got absolutely nothing to moan about as far as those results are concerned. Price rallied very nicely, and it's heading towards a new all-time high. So hopefully we can print that, in which case it will confirm an uptrend that's been in place for a while now.
Ntobeko, your take there. I mean, I was chatting to the CEO, Val Nikas, and she seemed quite cautious when it comes to consumer spending moving forward. And I mean, we were just talking about that positive budget for consumers, where consumers will be getting some relief and also just generally more money in their pockets. And I'm also wondering whether the caution is against a backdrop where we are seeing more consumers spending on gambling.
Wow, that is a topical one, because the whole gambling question right now is we're all debating, we're all grappling with, in that it does take away from that discretionary spend, and people are actually gambling away their income, and so it might have a negative experience for the quality for the consumer stocks and so on. So I think, I mean, the jury's out on that, but certainly the opinion is that it is a drag. It is taking from Peter to pay Paul, and so we're going to have to wait and see. I mean, if we look at Spur's results, they're positive. They had a positive Christmas experience, and so they've done fairly well on those results. So they might see things differently because of their own positive experience, but maybe retailers like your Truworths might be having a different kind of experience in terms of the consumer and their experience in terms of their spend or their share of the disposable income. So I think it's going to have different impacts depending on the nature of the retailer and the discretionary nature of their business.
Yeah, and a double whammy there for the clothing retailers, because while, yes, you are seeing gambling eating into many consumers' disposable income, there's also really tight competition with those Chinese players also eating up their market share. Question here on Sibanye Stillwater. Is Sibanye worth while holding if one has confidence in the PGM sector? It seems preferable to swap one's holdings to another counter. Ntobeko.
I'm not an expert on resources, but I do know that in terms of our positioning as a house, Sibanye Stillwater is one of our quality picks. I mean, we've got what do you call it? Sizable exposure into the commodities basket. Gold. We're still overweight. Palladium, and we have a positive construction on those sectors. And Sibanye Stillwater still forms one of our overweight and quality plays in that space. So that as much as I can share in terms of our positioning and the confidence that we've got from our resources analyst on those positions.
Your positioning on Sibanye Stillwater, Ricus, I mean, when we talk about quality PGM counters, consensus or many analysts pick Valterra, and Valterra out with results yesterday. Those numbers looked great, right? And investors will be smiling all the way to the bank.
Now, if you're looking for a pure platinum player, it is Valterra, not only because of platinum, but specifically because of its nickel operation or its nickel byproduct operation, which is nickel cathodes, which is going to be very, very important in air-to-liquid power generation going forward. Sibanye is a bit of a different animal. I mean, obviously, it's also involved in gold as part of its operations. The other unique thing is that they've got operations in America. And they're also moving at least into the green energy space through their lithium development. So you can't really compare Sibanye with, for example,
Yeah.
Volterra. So it's an interesting play. Their latest results. There was a couple of impairments, which is, I think, is always negative for any company because of what's happened. Operationally, shall we say, the going concerns did well. They managed to obviously benefit from the metals prices as well, including gold. But it is volatile, and it's possibly, I would imagine, not exactly the same quality, both in terms of operations and also resources.
Moving over to more of a defensive player, that being Bidcorp. A viewer here just asking for your analysis on the results that were out yesterday, Ricus. I think the share price closed in the red yesterday, but it seemed to have somewhat recovered in today's session. I do stand to be corrected. So what were the market expectations going into the results? What factors may have contributed to the negative share price movement despite what appears to be solid fundamentals? And based on the current outlook, what would you advise continuing to hold the position, or would it be prudent to consider selling?
Yeah, it's a difficult one, and I'm biased because I have some in my own portfolio where I've moved to an underweight position over a pretty long period of time, and again, not because it's fundamentally not a well-run company, not because its business isn't doing well in context of being a food service provider in Europe.
Yeah.
The one thing that's been against the share price is obviously the fact that they are a rand hedge, specifically as with the UK and euro weakness versus the rand counting against what's happening on the bottom line. So I don't think it's the continued selling in Bidcorp's got anything to do with the fundamental operations of the company or even the current valuation of the company. Just people saying, a bit like me, there's probably better opportunity somewhere else than being stuck in something which is very well run, but which is not in favor as far as market sentiment is concerned.
Anything to add there with regards to Bidcorp, Ntobeko? I mean, maybe looking at it over the past few years, coming out of COVID, we did see like really great growth when it comes to the bottom line, double-digit growth, and then we've moved over to single-digit growth as we are seeing demand normalizing. That did raise some concerns at some point, but the company did note that we would normalize from the pent-up demand post-COVID.
Yeah.
Well, I suppose, there's, when it comes to these global consumer goods, there is a bit of competition in the portfolio, in that you've got a better alternatives, from what you can hold, so, and SA Inc., consumer stocks have been doing very well. So you need, stocks in the portfolio to actually fund some of the better growing sectors, which is in SA Inc. So I'm not surprised then that, if you're growing at single digit and you're still guiding upward, and that there's better experience elsewhere in the portfolio. And so those trades or those holdings in your portfolio then become sort of funding trades for other better opportunities. So for me, there are better consumer stocks to buy that are in SA Inc. And Bidverse will naturally be one of the funding trades there.
All right. Moving over to the next question. Ntobeko, what would you pick between Supergroup and Motors? The viewer here saying they're looking to add a counter that has been growing on the back of increased new vehicle sales. Those companies both out with results, and we did see both of them benefiting from increased new vehicle sales. Motors, however, late to the party when it comes to those Asian cars.
Yes, the answer is in the question, with motors being late in getting into the Chinese bandwagon, and so therefore being beaten to the chase. And so, I mean, and I think, and that's just the general hallmark of, the SA motor industry, is that, your original OEMs that we know, your German cars, you've seen that, they're hemorrhaging when it comes to sale, and that the Chinese market is growing much faster. And so if you have that exposure, you're likely then to experience superior returns or growth. So it's fairly obvious then that at this point in time, SPG is beating motors at this game.
There's another player in that segment, Ricus, that I'm forgetting, but that counter did really well on the back of including those Asian brands into its range. I don't know if you know it, but anyway, let's put up SPG and Motors. There's another one. Let me do a quick Google, but go ahead.
Yeah, I would agree with Ntobeko. Super Group obviously benefiting from this move into your cheaper Chinese models, and they saw that gap and they focused on that, and it has come through very well in their results. I was worried when they sold the Australian business as to what they're going to do with what's left, but they've executed beautifully. I'm very biased against Super Group because I've never been able to get that one correct. I always sell at the wrong point or buy at the wrong point with them. So, but yeah, if just on these results, they did very well when compared to Motors. But I think one should also not forget that Motors is far more than just dealership. They're also into after, into parts sales, aftermarket, that kind of thing. So you're buying a more diversified business that's got a really very good track record of knowing what they're doing. So there's a bit of a consistent management story there as well. Whereas I've said with Super Group, I've always been wrong with it, and nothing to do with management. It's just for some reason whatever they've done has always caught me off cycle. So I wouldn't even trust myself to give a very neutral commentary on Super Group.
The company I was actually speaking about there is CMH. Yeah, that's the one. Okay, let's get into your stock picks. Ntobeko, where do you see value at the moment?
I think when we spoke a little bit about benefits of the budget. We spoke about, a lower interest rate environment, how it impacts the consumer and maybe lower NPLs. And if I look at our portfolio, we've got significant exposure to banks, and we like First Rand. But you would have seen today that Nedbank, had a very strong day. From a quality perspective, it's probably less of the quality banks. And if you look at just ROE, it's around 15%. First Rand at about 20%, where it was up 8%. And that's just alluding to, there's just the improving, call it, environment conditions for the consumer, and improving experience for the banks, and it alludes then that maybe to maybe expecting more positive results than from the other banks when they share their guidance. So we like First Rand. I mean, despite its challenges with the UK business and legal challenges, and I think as those things unfold in the next few months, that overhang as well will be would be out of the price, and we should see the stock continue its strong performance.
All right, Ntobeko going with SA Inc. Picking a bank. What about you, Ricus?
It's one I had not that long ago, Reuters, and I think the budget just reinforces that in terms of, as PSG's chief economist said, that we can possibly look forwards to having South Africa's investment grade being upgraded and Reuters will definitely benefit from any capital investment into this country as that part of their business. And then the other two vectors of growth that I really think is pretty exciting for Reuters, specifically with the new CEO in place, is their defence sales or their defence arms, where revenue is doing very well, and thirdly also their at least exposure to the American market as far as, shall we call it, electrical components in the whole AI build-out that we are seeing in the US, where they also have a fairly decent foothold. So there's a lot of avenue for growth, and they're certainly not expensive at a 10 price earnings and a 4.5% historic dividend yield.
Right, let's leave it there. Thank you so much for your time and joining me this evening. That's all for Stockwatch today. Thanks to our guests, Ntobeko Stambu from All Weather Capital and Ricus Reeders from PSG Hole-in-One Ruimsig. Up next, it's the close. But before that, don't forget to tune in on Friday, as we'll be bringing you the live presentation of Fortress's half-year results, and that's right here on Business Day TV at 9 a.m. So be sure not to miss it.